Hey everyone, Keith Makse here. Welcome back to my channel, Power Up Personal Finance. This is where I get to talk about a couple of my favorite things, personal finance, and also games. So, one of the things that I'd like to talk about today is investing and sort of a beginning way to invest. In video games, I'm a particular fan of role-playing games. One of the things that you invest in is your equipment, and the whole point of your investing in your equipment, let's say it's a fantasy role-playing game. You invest, you're a warrior, you invest in your sword, your shield, your armor, maybe some other gadgets, maybe a torch to start out with. If you're a rogue like character, you're going to be investing in things like your lockpicks, maybe some type of sneaky boots, something like that. And if you're a wizard, you're obviously going to be doing some type of magical investment, whether it's a staff, a wand, maybe a few magic scrolls, something like that. So, and the whole point of that is that as you go forward in your adventure, in your game, um, the idea is that you're getting more powerful. You're giving yourself the tools to be able to handle different things and be able to overcome whatever goals that you have, such as, say, you have a magical demon that you have to fight. It's terrorizing the countryside and you have to defeat it. And maybe you need a special scroll or a special weapon of some type in order to banish it from your plane of existence. Then, if that's the case, you need to be able to survive all the things that are heading towards your goal of eventually hitting that demon and getting rid of it. So that's the way I kind of look at retirement. Is that it's a goal, it's a journey, it's an adventure to get there. It's not going to be overnight. We're not going to get rich overnight. We're not going to win the lottery. I'd bet you dollars to donuts right now that you would not win the lottery if you bought a ticket. I mean, they don't call it the idiot tax for nothing. So, I think what I'd like to talk about is how we can build up passive income, ways that we can make our money work for us. So let's say we've created a budget, we've paid down any debts that we have, and now we want to actually make money. And we want our money that we save not to just sit in a bank account where, if you put it into a bank account and you're earning something like 2% interest, you're not actually saving any money at all. You're barely getting by the rate of inflation. You're probably losing more money than the rate of inflation at that point. Inflation is anywhere between 2 to 4%. And then certain things inflate at a higher rate. So that's general across the board. But recently I've been looking at education, and I recently found out that post-secondary education in Canada inflates at 8% per year. And I found that to be a bit of an astonishing fact. So, like I was saying, things inflate at a different rate, and you have to be prepared for those things. But in general, across the board, inflation goes up by about 2 to 4% in Canada on an annual basis. So, if you have your money just sitting in a bank account, it's not doing anything for you. And there's so many ways to actually increase your money, your passive sources of income and revenue, way more than the rate of inflation. You want your money to grow for you. You want your money to work for you. Here are the top 5 things that I recommend that you look to invest in so that you can get yourself closer to retirement. Item number 1. So the first thing I would recommend that you're doing is that if you're not retired yet, that obviously means that you're working towards it. If you're working towards it, that means you're working. And if you're not self-employed and following your passions and dreams, then one of the ways that you can actually get a little bit of a leg up is a great job. And by great job, I don't mean like it's a wonderful place and the people are great. Those are really good benefits to have as well. You really want to have sort of a level of job satisfaction while you're working there, because you're going to be doing it for a few years and you will have to grind at it. Maybe you'll be able to work hard and get promotions and raises along the way. But the most important thing is that there are benefits in place. So, depending on your stage in life, you may need more medical benefits, and some places provide some great benefits available uh, in because they can actually defer a lot of the costs of so many different people across their entire staff. So, large organizations are able to do this more easily than small organizations. It comes down to it that medical benefits can become very expensive. I've taken a look at my own, and I already know that in Canada, I keep all my medical receipts for health, for dental. I have a kid who's getting orthodontics right now. So it can get pretty expensive very, very quickly. And if you don't have the right benefits in place, you can wind up paying a lot for it. So I know how much we've spent over the course of the year out of pocket, which is still quite substantial and something I think we're close. We can actually put it on our tax return that we've actually had to claim so much. So these are things that happen. Another part of a good job, this is point two, or not number two, but this is point B, let's say, 1A and 1B. So 1B is also having a great job that can provide you with some type of either retired pension plan or registered savings plan, or an RSP. So with a registered savings plan, the whole idea is that if you can get an employment where your employer will match, whether it's a pension plan or a registered savings plan, I don't care. If they max that out. And the reason for that is basically it's free money. Yeah, you have to take away part of your paycheck every single time you get a paycheck, but it's free money. Like, use it. Like, if my employer says, "Hey, we'll give you $100 every time you put in $100," well, sign me up. How many hundreds of dollars can I put in? Because I want them to match that as much as possible throughout the year, and that way I can make sure that I'm getting 100% return on that investment just by having them match it. That alone is amazing. How many other places where you can get any kind of matching program? So those matching programs really can pay off very, very quickly, very fast, and again, it's free money. Why wouldn't you do it? Yeah, it's an amazing benefit that some companies have. Point number two is investing into something simple. If you're not familiar with stock markets and, say, options trading and things like that, then an easy way of investing is opening up an account at Wealthsimple or Questrade. These are two Canadian accessible sort of robo-advisors or investment locations, online investment banks not a bank, sorry, an investment brokerage, I think, where you can actually put your money, you can actually open registered accounts, a TFSA, an RSP. I think with Wealthsimple, you can open up an RESP, the Registered Education Savings Plan. So if you have kids, or you think you're going to have kids, or you just want to go back to school yourself, put it into an RESP. The government will contribute an additional 20% on top of what you're already contributing. So it's fantastic rates of return. You want to maximize that money as quickly as you can, as much as you possibly can. So investing into these different platforms as well, if you're opening up a TFSA, again, tax-free savings account. Any money you put in and you make money in the TFSA, you can withdraw later tax-free. You never pay taxes on that money when unless if you do something really wrong. But you really shouldn't be doing anything to pay any taxes on it. You can even roll a mortgage, I found out, into a TFSA. So if you're able to use that product to grow your wealth, and let's say you have $500,000, and if you want, you can withdraw from that tax-free every single year. You can, for 10 years, you can withdraw $50,000, which tax-free is an amazing amount. That's equivalent to probably a $70,000, $80,000 a year job. So yeah, tax-free savings account, amazing stuff. I highly recommend that you max that out as soon as you can. If you need an RSP or an RESP, they also have those available. Now, I'm not going to go into detail about all the different intricacies and different funding platforms that they have in order to invest with, but needless to say, there are a lot of options within. Start looking around in there and seeing what actually works for you. And again, one of the things that I'm doing on this channel is that every subscriber that I have, I'm going to be depositing $1, I believe, into a Wealth Simple account now. I was taking a look at it recently, and that way I can share out the data a little bit more easily with everyone, because otherwise it's showing off my other stuff that I have through Questrade. But anyway, I'll be depositing $1 into a Wealth Simple account so everybody can see what an ETF looks like, maybe what some stock looks like, what and then eventually, if that money grows to a significant amount, here's what real estate looks like, and we can do some other things as well, and just options of what we can do with those types of investments. Option number 3, peer-to-peer lending. This is not really a big thing in Canada yet. I think that there's a lot of regulations that are holding a lot back. I know in the US they have real estate peer-to-peer lending. They have a whole variety of different ones. Here in Canada, we have Lending Loop. Lending Loop is very interesting as it is a business loan-based peer-to-peer lending group or lending platform. So the idea is that if a business can't normally go to a bank to get a loan, then what they can do is they can go to Lending Loop, they apply with an application, they get vetted by the representatives there at Lending Loop, and then they're assigned a score, and that score is similar to your grades in high school. It would be from like A plus to E. So you have this wide range between them. So A plus means this is a great company, they have a great track record, they have great strong financials, so the risk is all that's what the interest rate that they're going to be paying back is basically saying how risky they are. So if you have an E plus, they're going to be, I think, around 7% paying back the interest. And so you get to keep most of that. Some of it goes to Lending Loop as part of their transaction fees. And they pay back monthly, right from, I think, month 2 after they get their money from Lending Loop, once they finally finalize that, their agreement. And then what you do is you go in and you say, hey, I like the sound of this company. I'm going to give them $25. They have a lot of other different options in there, such as auto lending. You don't even have to review every company that goes in there. And you can just lend out to any company that signs up, because I found that sometimes you'll get, a week goes by and you might get one company and it gets gobbled up really quick, and it was a great opportunity that you missed out on because you just didn't log in at the right time. Or other times there'll be like half a dozen, and some of them are going to be a little bit slower to move because they're not a great company, and the good ones might get snatched up earlier. So it's a matter of just making sure, how, if you want to turn on auto lending, you don't get to control who you put it into, but you can control the grade score at least. So you say, I only want to auto lend to A plus companies, then you can do that. Or if you have a range, I have a range on mine, I think it's E plus to C or B, I think. B or C, one in between there. It's not too far down though. I think it would be a C plus at the worst, but I really want to make sure that anybody I'm investing in is going to be fairly strong. And so I'll take that little bit of a risk. You get a little bit better of a payout. I have invested into C's and a D, and the rate of return is pretty good. Right now I'm averaging around 14% on the returns on there. But one of the other problems that I find is that you don't get to control who, if you're doing the auto lend, there's other things you can't control, like the length of a loan. In some cases, a loan can be as long as 5 years and as short as 2 years. And with that with appropriate rate of return, they're paying back monthly, and they'll be making a large loan payment, and then you get a portion of that loan payment, whatever your apportioned value was. So if you put in 1/100th, say they had a $25,000 loan and you put in $250, then you're getting 1/100th of that. That you're getting that amount back every single month, which is a part of the principal and the interest every single month until the loan is carried through to its completion, and then you're getting your final payments out at the very end. Now I have I think one investment right now that's currently in default. I doubt that they're going to be paying. I know I was talking with a friend who also does Lending Loop. He has a different company that also is in default. This does happen on the platform, and there is zero protection against it. So far, it's been pretty good. I've made some decent returns on it, but my money is now locked into that platform for the next few years. I started about a year ago, so different loans. I've already had one loan completely paid out, which was really cool. They do have early payment options as well. So peer-to-peer lending, it is an option. It's a very simple platform to learn. I highly recommend looking at it. I'm not sure if I totally give it a thumbs up, but there are some positive attributes to Lending Loop. And I know they also have the ability to do referrals, so I will post a referral link in the section below here. And if you are interested in depositing your money and trying it out for a little bit, give it a shot. Use the referral link. You'll get, I believe, you get an extra $25, like an extra share, basically, which is the minimum trade amount, $25, and you can give that a shot. So it's a very interesting way to pay people to try it out. Item number 4. Yeah, 4. There we go. So item number 4, real estate. By far, this has been one of the best opportunities for me, at least, in order to growing my own wealth and securing a solid path towards retirement. I've been able to grow my net worth. I've been able to purchase properties. Back in 2010, I started by having the initial primary residence that I had, and I moved out. I moved out of province, and I kept it, and I rented it out. I've had some good times, and I've had some bad times with that, especially when they abandoned the property while I was in another province, and I had to fly back and spend 2 weeks cleaning it up and getting it all done and rent it out to a very lovely young couple afterwards. But real estate is by far the most interesting way and the quickest way. Well, I shouldn't say quickest. It's the opposite. It's a slow, long road to building wealth. And I highly recommend it because you're able to purchase a property. You get appreciation depending on your marketplace. I make my money on cash flow when I rent it out. It can be a little bit tricky because of the way the rents to mortgages are in this area. But I also get to make money on mortgage pay down, which is like a forced savings account. And whenever I need to, I can withdraw that money, I can refinance the property, and I can use that equity that builds up over a couple of years towards something else that may be another property. And then I can keep snowballing this faster and faster and faster. Right now I'm up to 3 rental properties right now. This one right here, we just bought one over the Canadian Thanksgiving weekend. So we're currently renovating this. That's why I'm in my scrubby clothes today. We're renovating this into an Airbnb while we're moving into our next one. And we're also renovating that one at the same time. So we have 2 major projects on the go. I haven't done this before, so it's kind of interesting to do that. Item number 5. This is by far the most important investment you can make. And it sounds cliche, but I'll give you an example of what I just did this weekend. The most important thing you can invest in is yourself. Education. You never stop learning. It is a very important thing to keep learning all the time. This weekend I heard about, so I listened to Erwin Zito's podcast, and he was talking about his friend Omar Khan, and his electrician starts with an A, and I forget his name, and I actually met the guy like in line getting lunch one day. Super cool guy. But they were talking about his friend Omar Khan and Matthew Todman, who do stock option trading, and they do everything to mitigate risk and put odds in your favor towards having a successful trade on the stock market. in selling put options. Now, this might sound all confusing, and yeah, you should actually go to a course. I went to the weekend course. I spent 16 hours learning all about selling put options, and it was something that allows me to grow my money quickly. Well, not quickly again, without the effort of, say, buying a house, renovating it, dealing with tenants, having issues, having to deal with a landlord tenant board. None of that. I can actually make as much, or if not more, potentially, through the stock market, through trading, with some very smart people behind me supporting me over the next 12 months. So this is something I'm extremely excited for. I was very happy to attend that course. I made sure that I spent that money on my education. But your education doesn't have to be from a paid for in a monetary value. I mean, there's a lot of education you can get just by talking to people, networking. For pretty much all of this year, I've been joining different networking groups, meetup groups, and getting to know people in the real estate community, getting to know people in investment communities in general, and getting to talk to them and learning what they're doing and what am I doing, and then having you find different ways to do different things, and it's amazing how much you grow. And as Warren Buffett says, the more you learn, the more you earn. So I think, for me, I'm looking at it now. It's the beginning of December. I'm looking at 2020 going, yeah, this is going to be a pretty awesome year coming up. I'm really excited. There's so many different options for me to make money. I have this Airbnb. I have some stock trading I'm going to be doing with some support of amazing, supportive, and very knowledgeable people. I'm very excited with that. And being able to just communicate with other people. And network with those people who are all interested in the same thing I am. So investing in yourself, by far, education constantly, is a great way to help you learn so you can earn towards your way to retirement. I think that, for me, the goal of retirement is, it's not an end point. It's a transition period. And what I want to do is really, it's not about money. To me, it's about freedom. It's the freedom of time to do the things that I want to do. It's the freedom of time to take care of the people that I want to. It's a freedom of time to spend time with the people I want to. It's a freedom of time to, do things, passionate things. For me, the things that I'm most passionate about that I can't do right now. And, some of them are going to be costly. I would love to learn how to fly a plane. And when I was 18, I tried to get into the Air Force just so I can learn how to fly. And being able to do that, to me, that's something I need time and money in order to do. And that's where what I'd like to do in my own retirement, as one of the many things I'd like to do in my retirement. So again, thank you very much for watching. Those were my 5 top investment ideas that you could start with today. None of these are expensive. Some of them do, like investing into Questrade or Wealthsimple, do require some upfront capital. Same with Lending Loop. But at the same time, there are so many options. You can even go to if you don't like that, you can go to the bank and just open up a TFSA account and just start filling it up with cash. And starting off with that. There are many ways to start off with investing that cost you very, very little, if not nothing at all. Again, I appreciate your time watching this video. It means a lot to me. Again, if you can hit that subscribe button and the notification bell icon, that way you'll be notified anytime there's a new video that's going to be uploaded. And then as well, any new subscribers that I have, I'm going to be depositing $1 into a Wealthsimple account so that we can see exactly different types of investments, what I look at when I'm going to be investing, and then how we can all share in that same sort of journey and experience of investing that way. It's a way that we can, share that knowledge, and I think that's a very important thing. If you can also just leave a comment below with what investment strategies you may think of that I haven't put in here that you might think belong in your top 5. I'd love to hear more from other people about what they'd like to do. So thanks again. I really appreciate you watching, and until next time.